Welcome to the program. I am Folashade Ogurinde. Despite the well-known risks associated with ponzi schemes, Nigerians have over time shown a huge appetite and maybe addiction to these schemes. The allure of high-return investment has led to financial losses estimated to over 300 billion naira in the last 5 years. The ponzi scheme founders take advantage of the country's large population, rising inflation and perceived poor performance of the capital market to rob unsuspecting victims of their money. So how can you identify and avoid a ponzi scheme? Ayodeji Ebo, Managing Director and Chief Business Officer, Optimus by Afrinvest, joins me now on the program. Thank you very much for joining us. Now, how can you differentiate a ponzi scheme from real investment opportunities?
Thank you, and good afternoon, everyone. Yeah, so the first thing that I would like to state is that we all need to be aware that it's a hard-earned money. So you need to also create time to research into available investment. So once you understand the characteristics of what I'll call the traditional investments, then it will give you an idea when you see something that is off that model, you'll be able to ask more questions. And look, just trying to list some of the ways you can identify Ponzi schemes. One, you would see that they would give you unusual high investment return. And some of those returns, you would see that they tell you make 2% or a certain percentage per day, per week, per month. Then you should ask more questions. And most times, like we'll always say, once it's too good to be true, then most times it's always true. So you need to find out. Secondly, when someone is trying to sell you a product or services and it's taking time for you to understand how they make their money, then you should run or you should avoid such investment. And if you have to also invest in those form of investments, you are taking a high risk and you can invest what you feel if you lose will not set you back significantly. Also, it's good to note that guaranteed investments are very rare. And when you hear the word guaranteed, for an investment that is not fixed in nature. So we have fixed income investment like commercial paper, treasury bills, bonds that are fixed in nature. So when you are buying such instruments, you know that the interests are fixed. But if someone is selling you a product of trading services and it has that guaranteed element, then you need to be very careful. It would be a Ponzi scheme, because you would also need to understand that where are they putting the money? There's no guaranteed risk. No business will tell you that everything is guaranteed. And there's always an element of risk in most things. It's also good to find out if they are registered with the regulators. So you have we have the Securities and Exchange Commission. And most people, for public funds, any instrument that will be sold publicly, it's expected that it's registered with the Securities and Exchange Commission. So you find out if they are registered with the Securities and Exchange Commission. That would also help you, because most of these firms are unregistered, and it's important to note that. And I think lastly, that I want to speak on for now, it's for most of the Ponzi scheme, you'll be expected to bring in someone. So the way Ponzi scheme works is that they take from those that are the new investors and they used to pay the old investors. And that's why you call robbing Peter to pay Paul. That's the model of Ponzi scheme. And to the way I always put this into perspective is that most times they want you to bring in your loved ones because it's those that trust you that will want to come in. If you always see it like you are trying to entrap or to trap your loved ones, or they are going to pay you their own money, and at the end of the day, they would lose out, even if you are fine, then you would always be very conscious and you won't be very quick to invest in Ponzi scheme. They will always want you to either bring in someone or they increase the rate of that investment such that you don't take it out. So these are just some of the highlights of how you can identify Ponzi schemes when they show up. It's always good when in doubt, also always ask a professional. They will be able to guide you, even if you don't accept whatever is being said, but it will help you to shed light on some of the areas that you may not have seen.
Now, what are some of the tactics deployed by these Ponzi scheme founders to defraud unsuspecting victims? Because we've seen over time, people who have lost a certain amount of money, another one comes up and they keep investing their money. So what are these tactics Nigerians need to identify and, try to avoid?
Okay, thanks. I think the first one is they know that they come in when they feel interest rate environment is really very low. So investors are under pressure to see how they want to beat inflation. So you see, for instance, now Treasury bills is trading at about 4.5% for 1 year, and inflation is about 15.6%. So investors would be so concerned and be under pressure to see how they want to invest in what would give them high returns. Secondly, with our economy situation, a lot want to turn around the little they are earning. So that drive to see how they want to quickly turn around. Some even know that this thing will fail, but they want to try their luck. And when you look at even the betting industry, you would see that a lot of people take chances. And that they've been able to play on um, that psychology that people want to take chances with anything that has the probability of you winning. So it's like a gamble. So let me try this. I know it's a Ponzi scheme. I know it can fail anytime, but let me try my luck. And if I win big. And if I lose, some even lose very big. So they've been able to play around that psychology such that uh, we'll just continue to emphasize this, but there are a lot of Nigerians who would still want to try their luck when they see such investment. But it's good that this is being raised such that when they lose their funds, they would also remember that one or two people had cautioned them or programs that have been done around it. So I think by and large is that people should be mindful. If you know that this fund, this money, you worked hard for it and you could lose it, it can disappear. We've seen instances that people, their whole retirement, because they've been paying consistently, all their retirement money, they put it there, they earn for 1 year or 2 years. After 2 years, everything they worked for disappeared, and there's no strength to begin to gather another one. So once you think about the scenario of what could happen, what if this money doesn't come back? If you know that you can survive, you can still live, then you know that you have quantified your risk. But if you know that it's really going to drag you down significantly, then it's really very important that you are very cautious about it. Even if you are not making much money, when you get to a certain level, capital preservation is key. So once you are after capital preservation, gradually, it's only a matter of time. With the principle of compounding, your investment will also grow. So once you have that in mind, you will not be swayed by whatever arrangements or psychology that the Ponzi schemers play on.
Now, it's interesting that you mentioned psychology because definitely there's usually an emotional side to money. But we've spoken about fake investments now by way of Ponzi schemes. Let's explore legitimate investments that Nigerians can explore. Tell us a bit about that.
Okay, thanks. Uh, I'll be starting with the one with very minimal risk, which is accessible to everyone. It's the FGN savings bond, federal government savings bond. It's the minimum investment is 5,000 naira, and you can access this through your brokers. You contact them. It's issued every month by for 5 days by the debt management office, and the interest rate is significantly more attractive than treasury bills. Interest is paid quarterly, so it means you have a bit of cash flow. And what I would always emphasize on is you can use it to also build your portfolio. When you are setting that type of account, you should have a dedicated bank account such that when you receive your interest, you reinvest that interest when you are investing the principal for the month based on the savings target you set for yourself. Secondly, you have treasury bills. These are also issued by the government. Most all instruments issued by the government are backed up by the full faith of the government. We know that the worst case is that CBN will provide that support one way or the other. You can also look at commercial paper issued by corporates with reputable names. For commercial paper, there's always a rating. So you look at the rating. You can also look at dollar-denominated investments. We know how exposed we are in terms of our currency to the vagaries of what happens in the developed climes. So it's good that you are also hedged, that you invest in dollar mutual funds. Some have minimum of $1,000, some $100. You can also invest in um, equities, foreign equities. Also coming to Nigerian equities, you look out for those that pay consistent dividends. So if I know that this company pays a dividend compared to the price that I will buy it, and it will give me a return of 10%. So that's no matter the volatility, as long as I'm getting 10% on that investment, it may be fine by you. You are not taking as much risk as going to look for investment that gives you 30-40% that your investment may disappear. Mutual funds are also there. So there are several legitimate investments, but the concern is that the interest rate may look so small. But when you look at the power of compounding, and we always say when you're trying to start investment, start early. There's that advantage that you get over others that start after. So if you start early, you set a target of 20 years, 30 years, 40 years for yourself. For instance, for a 30-year plan, to have 100 million in 30 years, even at 5%, you may not need to contribute more than 120,000 naira monthly. And the interesting thing is at 30 years, the interest element would account for about 55% of the total amount you have, value of investment, which is like the 100 million. So you will see that what you are contributing is less than 50% of the total investment value. That's the power of compounding, which Albert Einstein has called the eighth magic of, of the world. So once you understand that, you take it gradually and you believe that you preserve your investment. And if you have to do it, I would plead that do it with what you can afford to lose. You have people that they trade in cryptocurrency, very volatile. But if you understand the risk that you are taking, you do your research and you confirm that this investment, it can turn to zero tomorrow, then you can afford to say, okay, 5% of my total savings, I risk it. And if it works well, fine. And if it doesn't work well, I learn my lesson and I move on. So once you have that kind of mindset, it will help you to minimize your risk and also prevent you from losing all your hard-earned savings or investments so that you have something to retire to when you don't have that strength to work anymore.
Well, indeed, Ayodeji Ebo, Managing Director and Chief Business Officer, Optimus by Afinvest. Thank you very much for your contribution. Thank you so much for coming.
Always my pleasure. Thanks for having me.
Well, we'll take a breather here, but Money Matters returns shortly. To stay with us. Welcome back. The International Monetary Fund, IMF, has in the past weeks dished out a series of economic advice to the Nigerian government. The report raised concerns over Nigeria's rising inflation, debt burden, and consequences of Russia's invasion of Ukraine. The IMF also projected the Nigerian economy to grow by 3.4% in 2022, up from 2.7% earlier projected. Now, beyond some of these projections and advice on economic policies, the Washington-based lender also announced that Nigeria and some other lower middle-income countries will be beneficiaries to a $45 billion trust fund. Joining me to discuss this further is Managing Director and CEO, Kairos Capital Limited, Sam Chidoka. Thank you very much for joining us. Now, the IMF reviewed Nigeria's economic growth potential to 3.4% in 2022, citing rising crude oil price as its benchmark. But the federal government has repeatedly stated that the increase in global oil price does not translate to more money for the country. Now, how do we reconcile this?
Well, thank you for having me. So what you find is that the IMF is correct in the sense that since the Russia-Ukraine war, we've seen an uptick in the price of commodities, chief among them being crude oil, which is our major export. And so what you find is that oil has been trading at over $100. Meanwhile, we had thought that oil would be trading around the $55, $60 mark for the year, not knowing that the Russia-Ukraine war was coming. However, challenge with Nigeria is that with increase in crude price also comes increase in refined products. And because we import largely the petroleum products, refined products that we consume in Nigeria, then you have issues with subsidy payment. So you have seen where we had budgeted to spend about slightly over R1 billion on subsidy in 2022, but we've had to revise that to about 4 trillion naira with the latest government estimate of what subsidies could cost us. So whatever we're gaining from the increase in price of oil, of crude, we're losing it in what we're paying in increase in price of refined products and what we're spending also in all manners of subsidies. Mind you that just 2 days ago, the federal government has agreed to also subsidize Jet A1 fuel. That is the fuel that airlines also use. So when you sum all the subsidies we're going to be paying in this year together, you will find that it doesn't translate to greater income. Perhaps we're even worse off.
Now, on inflation, the IMF projected that Nigeria's consumer price index will hit 16.1% in 2022. How serious is this?
Well, already we have the inflation figures of close to that as well. We have over 15% in inflation right now. We're closer to 16 than 15 at the moment. And so, yes, the IMF projection is correct. What that means is that inflation actually is a lagging indicator. So already we have felt the effect before the figure is given, because the inflation figure you will receive in the month of June will be the one for the month of May. So it's something that we've already endured even before it's announced. And also, mind you that food inflation is somewhere around 20%. So it means that for the country, for the average Nigerian, we're spending more of our income just feeding ourselves, reducing our disposable income, reducing our ability to save, reducing our ability to invest, and that will have an effect on the ability of for us to expand the economy. So high inflation is not good for anybody, for any economy. And for Nigeria, I know we have gotten to as high as 18, but it will be advisable that we do all that is within our powers to bring inflation to nearer a single digit than the 15% mark where we are today.
Now, the global lender also said Nigeria and 72 other countries at high risk of debt distress or already in debt distress. Now, this is, of course, not a brand new information to Nigeria, but how do you think this will play out, especially in 2022, the remaining quarters of 2022?
Well, so the issue of debt debt sustainability has been a conversation in Nigeria. So depending on who you listen to and who you agree with, there's a conversation around debt to GDP that we're still within a reasonable threshold of debt to GDP. However, I think we should be looking at debt to revenue. If you're spending over 90% of every $1 we make servicing debt, then we are in a difficult position. For the revenue that we make, our debt is presently unsustainable. And because, again, we're spending so much on fuel subsidy. As a matter of fact, I read a report that for 3 consecutive months, the NMPC didn't make any remittances to the Federation account simply because it's all been spent on subsidy. So if you are in that situation, the next thing the federal government is going to do is to borrow. And just about 2 weeks ago, I believe, the federal government issued another Euro bond. And all that borrowing is to fund mostly consumption. We're funding recurrent expenditure. We're funding salaries. Yes, we're funding some part of capital expenditure, but there's a lot of funding from borrowed funds going to recurrent expenditure, and that doesn't do good for our economy because it doesn't have the multiplier effect to expand the economic base, grow the GDP, and grow revenue for the federal government. So yes, we have a debt challenge, a debt overhang. And I think that part of what we need to do is to find fiscal means. There needs to be fiscal discipline in way we fund the lifestyle of those in position of power, politicians, National Assembly members. You know, we have to look at all of this. You cannot solve the challenge, the debt overhang challenge we have with only monetary policies. There has to be fiscal policies that help to reduce our expense on the recurrent side and increase on the capital votes expenditure so that our tomorrow will be better than our today.
Now, the International Monetary Fund, IMF, has called for debt restructuring for Nigeria and other African countries with debt crisis. On the other hand, the IMF has offered to raise at least $45 billion trust fund where member nations, including Nigeria, will be eligible to borrow from. What do you make of this? Is this not contradictory?
Well, it depends on the way you look at it. It might be a potpourri of all the things they want to do. So the first thing is, let's restructure your debt. If you have debt overhang that is quite expensive, or that the terms do not work well with your cash flow as a nation, we can restructure such debt. Then we can give you fresh debt, which might be better suited for your balance sheet and your cash flow management. If that is the case, then I support what the IMF is doing. But if it's just to restructure debt with one hand and increase the debt with the other hand, then it might not be the best for the nation. I think that for all the countries concerned, each individual country must look at their cash flow performance, their balance sheet position, and decide what they want to do per time. It cannot be one size fits all because all the nations are not in the same position. For Nigeria, I dare say that if we have long tenor, cheaper debt, then we can go for it. But anything aside from that, it might not be the case because we may just be going back to the situation we were pre-1999 when the Obasanjo government started working on debt rescheduling and paying off our foreign debt.
Well, indeed, Sam Chidoka, Managing Director and CEO, Kairos Capital Limited, thank you very much for your contribution on the program.
Thanks for having me.
And it's a wrap on the program. See you again next time. I am Folashade Ogurinde. Bye for now.